Stock market struggles. The S&P 500 experienced its worst week since the election, signaling investor uncertainty. Job market slows. The US added 151,000 jobs last month, falling short of the expected 170,000. The unemployment rate rose from 4.4% to 4.1%. Tariff tensions. Ongoing trade disputes are keeping the Federal Reserve in a holding pattern regarding interest rate adjustments. Market volatility and Trump's response. The stock market had its roughest week since September, yet former President Donald Trump claims he's not even watching the markets. This stance is in stark contrast to his first term, when he frequently cited stock performance as a measure of his administration's success. Previously, Trump warned that electing a Democrat would cause a market collapse. However, under President Biden, the stock market reached record highs, and retirement accounts flourished. Despite Trump's current indifference, Treasury Secretary Scott Bessent has been scrambling to mitigate the turmoil caused by Trump's tariff policies. If the Nasdaq were to fall 20% or the S&P 500 by 15%, critics argue that the administration's ability to tolerate such a downturn would be tested. Economic indicators and employment trends. The latest job report marks the first of Trump's second term. While 151,000 new jobs were created, the figure fell short of forecasts, and the unemployment rate ticked up. Federal employment declined by 10,000 jobs, reflecting recent layoffs at agencies like the Department of Justice. The broader economic impact of mass firings initiated by both Trump and Elon Musk is beginning to emerge. While some dismiss these as government jobs, federal employees play a crucial role in the economy, supporting businesses and contributing to consumer spending. Uncertainty in trade policy. Trump's trade policies remain unpredictable, with fluctuating tariff decisions impacting investor confidence. His latest move, threatening tariffs on Canadian dairy products and lumber, comes just a day after pausing certain imports from Canada and Mexico. This unpredictability contributes to economic instability, discouraging business investment and hiring. Inflation and economic inequality. While stock performance is one indicator of economic health, it's not the sole factor influencing voter sentiment. Inflation continues to weigh on working-class Americans, and consumer confidence is declining. Trump's tariffs are likely to raise prices, further straining household budgets. Additionally, his administration's proposed budget includes significant cuts to social programs like Medicaid while prioritizing tax breaks for the wealthy. Former Labor Secretary Robert Reich weighed in, describing the administration's approach as chaotic and warning that markets dislike uncertainty. Economic policies that exacerbate inequality, raise prices, and destabilize employment could ultimately lead to voter dissatisfaction. The bigger picture. While Trump supporters initially hoped for economic relief, many now face higher costs and potential job losses. At the same time, wealthier Americans stand to benefit from tax breaks. As economic challenges mount, the question remains: when will voters recognize the true impact of these policies on their financial well-being?